Wagner here. It is Wednesday, approximately 11 a.m. in Honolulu, 4 p.m. in New York City. It's the first day of February 2012. This is the daily report for gold and silver. We do have the metals markets higher this morning with a nice showing in gold and silver. Silver is up approximately 51 cents to 61 cents. You can see current print on the board, 33.69. And gold is trading anywhere between $6 and $10 higher. Currently up about $6.50 at 1742, 1743, as you can see right here. The key, of course, as I see it, is the dollar index. And as you can see, this is a line-only close. But you can see quite clearly that this market, after having a nice little rally yesterday, is back on the downside. We want to see if it can test this one area right in here. Kind of matches to the support area here. And our next real level is about 77.50 if it continues to drop. This morning, I do want to start with the silver market. On the upper hand of this screen, you can see two charts. This is our weekly chart, straight candlestick format, and our Henkin Ashi, or Japanese average chart. This is a daily chart. I have, by the way, added what I believe to be the most current count in terms of the Elliott wave count in silver. And as you can see, as this market came up, we've got this tremendous rise, very, very similar to the rise that we saw in gold, although this was a little bit steeper when you consider it went from 26 to 50, almost doubled in price. But then when it came down drastically harder. What we're looking at is an A, a B, and then our final C right in here. My belief is that our current count right now is that we have just started, just as in gold, we are in a major fifth wave. We are also in a intermediate first wave right now after coming off of this correction right in here. Now, in terms of the straight candlesticks themselves, let me go ahead and blow that up. You can see that we are still green. We are still long. Of course, we got long in this market at 28.10. Our current stop in the market is just below 32. We have it at 32.80, just above 32, right in here. And you can see that there has been some consolidation in the market. As we look at these doji candles on a daily chart, they are doji-like, meaning open and close are very, very similar. But when we convert this to our regular candlestick chart, what you'll see is because we take the open as the midpoint of the prior candle, it looks quite different. So you've got this nice long up day following a couple of days of correction. And what you can see very clearly in a candlestick chart is really this compression or consolidation. Because typically what we have seen in this market, we've been speaking about it for the last week or so, is that unlike a typical market which is moving up, correcting, moving up, and correcting, what we're getting is upward moves. Here you get a correction, but here you get an upward move and a sideways market, an upward move and a sideways market, again, an upward move and a sideways market. That tells me that the strength to this market is extremely strong. Now, right now, when we look at the price of gold, this is the strongest January, just in terms of price increase in gold, that we have seen in over 30 years. First, our weekly chart in gold. And as you can see, unlike silver, we do have an up week. You can see these are the lows that it made, I believe around 1718. The highs are up around 1748. That is on a weekly chart. When we go ahead and convert that to our Henkin Ashi, just so we get a better idea of the trend or strength of the trend, you can see it's quite different. Because now when we look at this weekly chart, what you're seeing is really a dominant strength within this market, meaning lower wicks, absence, body size, very, very strong. That tells me that on a weekly basis, longer term, you can see that these candles have been expanding in size. We don't have a lower tail. That is extremely bullish for the gold market. Now, at some point it's going to have a correction. There's no doubt about that, and we'll go into a counter wave 2. I'm not so concerned about that because that's to be expected. When we look at our daily chart, in terms of the minor count, I've still got to take a look at it because you really haven't had, you've had these sideways activities, but you haven't had really a strong correction. The only real strong correction came right in here. As you can see, the market trading down, but here it's almost a sideways market, and here it's almost a sideways market, meaning like what we saw in silver, you get the market going up and then sideways, up, sideways, up, and then this is a sideways, but it really is to the upside. So it is quite interesting. In terms of the count, again, we are long, way down here. We're long at 1580, call it. And our stops right now are below 1700, $43, really below even where we're thinking of placing a stop. I think that we've got a safety factor there. We've got a great trade. What I'm going to do is I'm waiting to see if this market is going to break out to the upside or break to a correction. If it breaks to a correction, obviously we want to pull profits. If it breaks to the upside, we're going to look to add to this position. Aggressive traders now will have 4 tiers or 4 legs. Conservative traders should have, 1, but possibly 2 tiers on this trade. It's a great trade to start the new year off. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.